First and foremost, the fourth straight day of positive trading for the market. What's lifting the market?
Well, that's some good news, maybe on the back of third quarter results, because third quarter results will be coming in another couple of weeks. So at least we're seeing some good news on the stock markets, and that shows that there's some kind of a rebound. Also, September 30th was the deadline for the recapitalization of the mergers in the banking industry. So the banking sector is on a whole different footing going forward. So that has probably contributed to some of the optimism we're seeing there.
The Naira could be quite worrying now at 161 Naira to the dollar, so significant pressure there. And that's despite monetary policy tightening in the last 2 weeks. Just doesn't seem to be supporting the currency. Why is that?
Well, we're seeing those pressures. There was a holiday this week, so there's been less on offer from the central bank. Normally, we would have had maybe 700 for the week. We saw 400, and what we've seen resulting is the greatest overhang in terms of unmet demand at the CBN is the greatest overhang we've seen since the beginning of 2010. The last time we had anything like this kind of numbers was in August of 2010. We're now in October of 2011, so that's quite a wide time frame. At the same time, we're also seeing the fastest pace of the currency devaluing in the official market, 80 kobo to 155.4. This gives an effective rate close to 157. Interbank, the Naira is doing about 161 to the dollar, and on the street about 163. So we're having gaps opening up, and then we're also seeing the currency devalue at a very fast pace. There have been some concerns on the level of reserves, and after watching what the central bank governor said today, it looks like there's been a bit of a shift in policy in terms of what we're going to see between now and the end of the year. What
did he say? Can you just talk us through it? Because it's being suggested that we may start talking about a new stability level for the Naira. It's always been 150 Naira, give or take 3%, and we're now talking possibly 154. Would that be feasible?
That would make sense, because right now, with the current levels, if you look at the cutoff of 155.4, we've already exceeded the 3% on the 150. I think we're at about 3.8. So we have no choice but to have a different level of stability, and then we'll be calculating 3% around that. That said, the 150 levels have been in force for quite a while. We've had maybe 24 months back, we've been at the 150, but we're seeing new pressures. Overall demands, levels of demand are going up, import levels are going up. So, something had to change at some point.
The factors that are going to have an impact on the Naira going forward, obviously it's the oil price. And we already know that for the 2012 fiscal year, the government's probably looking at $75 a barrel. But it's also the reserves that you talk about. And we know that the war chest is under pressure. It's also the possibility of removing a fuel subsidy with petroleum industry reforms. How is that all going to influence the currency?
Well, they will all have their own pressures. For the subsidy, that looks like January. It's January, but there'll be resistance, maybe from organized labor. There'll be resistance around that. That date may move, depending. There'll be some political implications around that. But in terms of the war chest, which is key, the war chest has been under pressure. We've been able to maintain it all along. If you look at it, that has also trended in a range, 32 billion, maybe between 32 and 34 billion at any point in time. So, to an extent, we still have the muscle to keep the currency, again, maybe a different baseline around the 3%. But if we see those levels start to drop, we get to maybe 32, 31, then yes, there will be some effect on the currency. The currency is likely to slide somewhat.